Today, we're digging into a really big deal, a landmark interim trade agreement between India and the United States, two of the world's biggest democracies. But here's the thing, this isn't just about tariffs and trade balances. No, this is really a strategic handshake, and it has massive implications for the rest of the world.
And just to get a feel for the optimism when this was announced, take a look at this quote from India's Commerce Minister Piyush Goyal. He's painting a picture of a truly transformative moment, one that's aiming to skyrocket bilateral trade all the way up to an incredible $500 billion.
So, how did we get here? And what does it all really mean? Well, in this explainer, we're going to walk through it all. We'll cover why this deal is happening right now, break down what each side is giving up and what they're getting, see the impact on key industries, look at the potential risks, and finally, check out the road ahead for this very powerful partnership.
Okay, so let's jump right in with the biggest question. Why this deal and why now? The backstory is fascinating, really. It's a story of a super fast shift from some pretty serious trade tensions to what looks like strategic teamwork. What's absolutely striking here is just how fast everything happened. I mean, look at this. Within a single year, the relationship went from high-stakes talks to the U.S. slapping on punitive tariffs over India's Russian oil imports. And then, a complete 180. This wasn't just a random flip-flop. It really shows you how quickly geopolitical priorities can totally change economic policy.
And that brings us to the big headline number, especially for India's exporters. The United States has agreed to slash its tariffs on Indian goods all the way down to 18%. Now, that is a huge drop from a peak that had soared as high as 50% when you included all those extra duties. But, this deal is about so much more than just numbers. The really crucial thing to understand is the strategic thinking behind it. Both countries are trying to build more robust supply chains that aren't so dependent on China, while at the same time cementing their alliance in this super important Indo-Pacific region.
All right, so with that bigger picture in mind, let's get into the nuts and bolts of the agreement itself. Who is giving what and who is getting what? Let's break down the core of the bargain. This gives us a really clear high-level view of the trade-offs. On one side, you've got India's commitments, cutting tariffs on a lot of U.S. stuff, that massive $500 billion shopping spree, and smoothing out regulatory hurdles. And what do they get in return? Well, the U.S. is dropping that key tariff to 18%, getting rid of other specific duties, and dangling the possibility of even better market access in the future. Now, an analysis from Asia Times goes a step further, and it asks a tough question. Who really gets the better end of this deal, at least in the short term? And what this chart suggests is that the U.S. gains are immediate and concrete, things you can put a dollar sign on, like that huge purchase commitment. India's gains, on the other hand, are seen as being more political and coming later down the road. Things like strategic alignment are valuable for sure, but they aren't cash in the bank tomorrow. So, with that in mind, let's see where the rubber really meets the road. Which specific industries are going to feel the impact of this deal the most? Agriculture is always a tricky subject in trade talks, and you can really see the delicate dance that was happening here. So for India to get U.S. market access for its famous spices and mangoes, it had to carefully open its own market to some American products, like animal feed. But you can also see what they kept off the table. Their most sensitive sectors, like dairy and rice, are still protected. Now, for Indian manufacturing, this deal could be a game changer. I mean, just look at textiles and apparel. That massive tariff cut makes Indian clothes and fabrics way more competitive in the U.S. market, literally overnight. Gems and jewelry are also set to see a big boost, and there's a lot of future potential for India's powerhouse generic drug industry, not to mention better access to the high-tech gear needed to fuel its booming digital economy. And speaking of that digital front, this agreement is designed to be a major shot in the arm. So what does this mean in plain English? Well, by getting their digital rules to match up, the goal is to make it cheaper and easier for businesses in both countries to work together online. And that, in turn, should attract a ton of investment into India's tech scene and really supercharge its growth. Okay, so we've seen all the potential upside. But it's never that simple, right? As with any deal this massive, there are some pretty significant risks and potential roadblocks we have to talk about. Which brings us right to the critical question you see on the screen. Is this really a clean, clear win-win for everybody involved? Well, as you might have guessed, the reality is a little bit more complicated. This slide really lays out the main hurdles.
First up, this big one. The deal is reportedly tied to India stopping its Russian oil purchases, which puts its long-standing relationship with Moscow under some serious strain. Then there's the risk of China pushing back, since India still depends on it for critical supplies. And back home in India, there are real fears that opening the door even a crack to U.S. agriculture could spark massive protests. All of this kind of feeds into that central criticism that the benefits might not be totally equal.
All right, so after all of that, the good, the bad, and the tricky, where does this partnership go from here? What does the future roadmap actually look like? The best way to think about this is that the interim agreement is just step one. It's the foundation. The next moves are pretty clear. First, put this deal into action and see what the results are. Then, use that momentum to start negotiating a much bigger, more comprehensive trade agreement. The ultimate prize here is to build a whole new kind of strategic economic partnership that could totally reshape trade across the entire Indo-Pacific. And you have to understand, the long-term vision here is huge. For India, this is about way more than just exports. It's about pulling in investment, creating better jobs, and positioning itself as a totally reliable, central player in the global economy. All of this is meant to directly support its national goal of Viksit Bharat, which means becoming a developed nation by 2047. So, if you only remember 3 things from this whole explainer, make it these. Number 1, this is just as much about geopolitics as it is about economics. Number 2, it's a classic trade-off. India gets much better access for its goods, but it has to open its own markets in return. And number 3, the success of this whole thing really depends on navigating a very tricky web of international and domestic challenges. And that leaves us with this one big final thought. As these 2 giant democracies align their economies more and more closely, are we actually watching the future of global trade get rewritten right before our eyes? Well, only time will tell.